Obviously, it raised eyebrows. From what you gather in your reporting, the regulators aren't seeing evidence that these particular trades did, in fact, cause any trouble.
That's right. So the regulators were looking at this issue after the story came out and have been looking at this issue for quite some time. The CFTC, which is sort of the main regulator for the futures industry, has expanded powers after Dodd-Frank, so they now are policing insider trading like you would expect the SEC to for stocks.
So Dodd-Frank does include that provision, the Eddie Murphy rule. So explain that to us, and if this is being used.
Right. So the Eddie Murphy rules goes back to the movie he was in with Dan Aykroyd in Trading Places about getting inside information on orange juice. So basically what this agency borrowed language from the SEC to sort of expand their powers to look at insider trading in a market that historically really hasn't been policed in that way.
So, obviously, one of the concerns that regulators would have is because you can use data and speed in new ways. We have been seeing over time concerns that people could access information and use it to their advantage. It seems as though your reporting shows the regulators are also using those things in order to police better.
That's right, and that's a very important part of how the government polices for trading on inside information. The SEC has spent a long time building out its capabilities as well as FINRA, and now the CFTC is doing that the same. Often these cases start with anomalous trading or trading that looks very suspicious, and then the regulators have connected dots and have to sort of work backwards to see how they all fit together.
So what sort of changes could we see then?
Well, so the kind of changes are monitoring surveillance, right? Looking at markets that never really had this, regulators really looking in that way. So there have been a few cases already since this. Last year they charged someone for trading, giving information about a client order to a friend and trading in their account. So very similar to what the SEC has historically done, but now being done by the CFTC.